Well, my name is Scott Lepley. I'm with Heritage Companies, and Nicole Tackett is with me. She is from Level 1, and I'll explain who we all are at some point. Jacob Sanders is with me as well. He's from my office. We're both partners with Heritage Companies, which is an insurance agency. We specialize in benefits. Level 1 is a professional employer organization, also known as a PEO. What they do is they work with employer groups, help manage the payroll, HR, what other things do you do? Work comp, benefit admin systems. So they're really our glue that helps hold this program together because they're basically they do all the work and I get to take all the credit. Okay?
This is true.
Wow.
And then Lifestyle Health Plans is the health insurance company, dental, and vision provider for this program. Lifestyle is underwritten by a company called Moldova, which is a large reinsurance company. They're based out of Wichita, Kansas. So they're local. Level 1 is in the River Market and have been in local the whole time. So, and I've been in business now going on 7 years. There you go. So I've worked with them a long time. Know them very well. Have a great relationship. So when Kip came to me and said, hey, we need to come up with some kind of an idea for our 1099 people, because just as we were discussing a second ago, health insurance availability, health plans, there's only 2 companies on either side of the state line. So more options, more benefits, lower cost, that sort of thing. So he tasked me with putting this together, and I was actually able to put together a program. We designed it really for realtors, because based on what you do, and the fact that most of you are 1099, and got an insurance company to say yes, which is really one of the hardest things to do, getting an insurer to go along with us. So, did it work? So, we've already introduced ourselves. I do want to point out one thing. One of the big questions that everybody asks me on the health plan is, what's the network? And we use First Health Network. And if you want to write it down to look it up, it's myfirsthealth.com. And it takes you right to the lookup page for finding your doctors, hospitals, etc. I've helped several people look up their physicians or family physicians, hospitals that they prefer. Nobody's been disappointed yet. So it's a really large network. And again, myfirsthealth.com. So, like I said, Kip came to us and said, get us affordable health care, get us affordable other benefits, ancillary benefits, other options. So we were able to put all this together, including dental, vision, life insurance, voluntary life insurance, disability, accident coverage, critical illness, and really a big one, 401k. So if you guys are looking for some other avenue for investments, you can do it through this program. Okay. So everybody is really the starting point is the health insurance. What does it look like? We're going to have 8 different health plans, and they're again offered by Lifestyle, and they vary from the richest to benefit plans. And you should have a benefit guide in front of you, and they correspond with these 2 slides. So we've got the Healthy 100 and the Healthy Choice 1000. Those are really the 2 richest plans that we offer. Not to go into super detail on the benefits, but the Healthy 100 with a $3,000 deductible is a 100% plan once you meet the deductible, which is good. It also has office co-pays and a drug card copay. So these are all traditional PPO plans. And then the next slide, I want to point out we do have HSA qualified health plans as an option. So even within this program, you could sign up for an HSA qualified health plan, and you could also do direct deposit into an HSA account. So we have a relationship with Great Southern Bank, so you can do direct payroll deduction, and that money will go directly into the HSA account. Okay.
Does the HSA account pay for your health insurance?
It would pay for your out-of-pocket expenses, since you notice those have high deductibles, no co-pays. Basically, you pay your first dollar coverages until you meet your deductible on those high deductible plans. But your goal really is, with a health savings account, is to start putting money away, try your best not to spend it, because you'd be like setting up an IRA for your health. My goal, I've got an HSA qualified health plan. I've got several $1,000s already in my HSA account. I'm going to hang on to mine until I retire, because when I do, I'm going to spend it on my Medicare supplements or any of my out-of-pocket expenses. But you have to have a qualified plan in order to establish that.
And it just rolls over from year to year?
Yep.
You don't have to use it?
Correct. Yes, it's a bank account, and it belongs to you. Some, if you build the account up enough, you can actually invest them into mutual funds. So So a lot of them, the HSA bank will let you do it if you have 10,000 in your HSA.
Huh.
So yeah, there's a lot. And the great thing is any dollars you put in there, as long as it's no more than the legal limit under the IRS, it's all tax deductible. So the way we've established this is you actually have a relationship with our company as a W-2 employee, so you get to actually deduct it on a pre-tax basis and direct deposit it in.
Then you never have to pay taxes on it, even if you invested it in your mutual
Even if you
funds or
invested,
whatever?
the interest that you earn is tax-free, as long as you spend it on unreimbursed medical, dental, and vision expenses.
Oh,
It's
okay.
non-taxable and it's not penalized. But if you take it out and buy a bass boat with it, then you will pay a penalty.
I didn't want one of those.
I love that example. I use it all the time. Don't buy it. Honestly, years ago, I had a guy buy a bass boat with. So you're not supposed to do
I made
that.
a
So.
Funny.
The guy needed a bass boat. It was for mental health reasons. I was like, I don't think that'll go. So really, I talk a little bit more about HSAs because it does tend to fit people that are self-employed in 1099. You guys pay a lot in taxes. One of your biggest expenses, you're a little bit over 15% for your FICA and Medicare because you're self-employed. So this program, the way it's designed, will help you with that. Okay. So in the lifestyle health plan, people are starting to realize as they're starting to take a look at some of these benefits, is they've really got a very interesting health plan and it's really designed well. They're one of the few companies that offer a wellness program that's built into it and it actually offers rewards for you. So one of the rewards is if you're in the first 60 days that you're on the health plan, if you do a health risk assessment and you go get a wellness check, they'll actually take $500 off your deductible for the year, for the plan year. So if you pick one of the $2,500 deductibles plans or something, you could get $500 knocked off of it, and for that year you don't have a $2,000 deductible. So, and that's in your first 60 days on the plan. I was talking to a realtor who's been approved and she's getting ready to enroll, and she was looking at the wellness program and wanted to know about the $500. And then her and her husband are going to get their dental checkups, and she wants to get credit for her dental checkups. And Lifestyles, they're getting them done this month, and she starts November 1st. They're going to give her credit for her dental checkups.
So you don't get any preventative things free, like you don't get a mammogram
Sure.
free. You
Yeah.
do.
Yeah,
You
it
do
still
get a few things
It
free.
still follows the well woman checks, mammograms, those
Okay.
type of things. Yeah, it's
Okay.
what you're used to seeing now in your health plans as
Right.
far as Affordable Care Act required, it's still going to follow
Okay.
those.
Gotcha.
Absolutely, yeah. And in fact, one of their programs is if let's say you're sick and your doctor wants you to go get a blood workup, if you go to LabCorp, they're not going to charge you anything for going to LabCorp. They have a great relationship with LabCorp, so if you use one of their locations, it's zero cost. So there's nice little nuances to this plan that really can add up over time. And they even offer some cash bonuses on the wellness program if you follow the program properly. Okay. International mail order under Lifestyle, which is really interesting. They have gone to Canada, Great Britain, and Australia and set up relationships and are purchasing pretty much like maintenance type drugs from those locations. And if you work in that mail order program, they'll give you a 90 days prescription at zero cost. They save so much money from importing them that they're willing to make sure you guys get them at no cost to you. And so go get your wellness checkup, take care of your maintenance drugs, and you shouldn't really have anything out of pocket. And like I said, large network, myfirsthealth.com.
Did at one time the government not allow us to get drugs from Canada and some of the other countries around? I thought they stopped that.
There was some talk about that, but you can still do it. It's,
Okay.
yeah, because
So this is legal.
yeah, well,
When I go to
me.
Mexico, they won't let me bring back.
No,
drugs.
well, I wouldn't probably go to Mexico and get my drugs anyway.
Yeah.
But yeah, it's pretty. But the insurance company's the one who made the arrangement to do it, so absolutely. Yeah, and and I don't know if they're subsidizing those other countries. There's just they're sold to them at a lower rate because they have some different laws. And one thing, you can't sue a drug company in any of those countries, so that lowers their cost of drugs significantly
Sure does.
there. So that's one of the reasons they get them from there. So how do I join? And that'll bring up Nicole and have her talk a little bit. You're going to complete a lifestyle health plan application. So basically, if you want, I think the better way to do it is through filling it out, e-sign it, that sort of thing, so I can work with you guys and email it to you. It's a fillable PDF, and you can just e-sign it, shoot it back to me, and we'll get you underwritten. So you do need to be medically underwritten for this plan. If you look at the rates, you'll see why, because the rates are really quite good. I think the most expensive plan that we were looking at, that $1,000 deductible 80/20, is probably a little less than $450 a month for that plan in Kansas, and even cheaper than that in Missouri. Missouri's a little cheaper. So, but to keep those rates that good, we have to medically underwrite you. So you do have to get accepted onto the plan. We're not going to rate you up if you get accepted, so it's the rate that you're looking at. So once you do that, you're accepted, then you become an employee of Heritage Health Plans, which is a company I started just specifically for this program. So you are actually joining a company. You will become a W-2 of that company. So the way I've explained it to everybody else that I've met with is, think of it as you're going to get a part-time job that you don't have to show up to for purposes of getting benefits. Okay? It's interesting. So clashing with your being a 1099 or any other W-2s that you have, it shouldn't. I've talked to a lot of accountants over the last couple of weeks about this program, and I spent a few minutes on the phone with them, and at the end of the conversation, it's like, oh, that's a great idea. So
accountants know about
They
this.
absolutely know about it. Yep. So, because you're just getting another W-2, in that W-2, what you're going to do is once you pick your benefits, you're basically you're going to be the one who decides how much you earn through our company. Well, the money you're going to pick is really just equal to the premium you're going to pay.
Right.
So we transfer the money, ACH it into level 1. They deduct the premiums out, zeroes it out. You don't pay federal tax, state tax, and you don't pay FICA Medicare on it. So now you're actually expensing a lot of this stuff out of your 1099, and you're not going to have to pay those taxes on it too. Okay? And then you get back a W-2 at the end of the year that basically says this is what you earned, this is what you deducted, and you have zero to claim. So, interesting. It's kind of what actually I've done that myself for a long time. I actually wrote myself a W-2 for many years in order to budget my tax responsibilities. So, and I did mine monthly because it was just easier for me to do it monthly. So that's what we do here. Everything's paid on a monthly basis. And so you'll just choose your benefits, and then you'll enroll with level 1, and I'll hand it over to Nicole for a second. You want me to hook you up?
No, I'm good.
Okay, go ahead.
So we're a professional organization, and what he's talking about is when you're hired on as an employee, you'll become a level 1 employee under the Heritage Health Plans company. So we will process your pay, we will file the taxes both on your employee side and on the employer side. And in addition to that, because you are an employee, you will also be covered under the work comp. So you will have work comp insurance available to you, and that allows you to get this whole benefit package available.
There you go. Great. Yeah, so there are fees, obviously. We've got to pay level 1. You got the work comp. There's a couple of taxes you guys have to pay because I'm not that benevolent. I don't want to pay your taxes for you. But I'll walk you through it. But put this number in your head, write it down, $110 per month. So whatever premium you're looking at, I just as an average write $110 addition to that as your overall cost. So, and the reason I say that is there's a $75 monthly fee that goes to level 1 to help us administrate all of this. You do automatically have to enroll this little life insurance policy. It's guarantee issue. It's only $1.60 a month, so it's cheap. There are some state and federal unemployment taxes you got to cover, and then the cost of the work comp. So when you add all that stuff up, if you just used $10,000 as your annual income, the fees add up to about a little over $1,300. So if you do divide that by 12, figure about $110 a month. Most of you will not do 10,000, okay? Because if your premium's $400 or $500, let's say you do medical, dental, vision, and it's $500 a month, that's only $6,000 a year, okay? So that'll really, with the exception of your life insurance and the administration fee, all of these will drop because they're based on what you're choosing as your income. So your fee would go down. Plus, if you think about it, you're shifting these dollars out of your 1099 and you're expensing all your premiums. You now are eliminating any of your FICA, federal or state taxes. When you add those up, it probably is going to zero out your admin fee. So really, it's a trade-off. And that's really the power of a PEO is you can do these kind of things through a PEO and it saves you money on your taxes and FICA. So, but I always say, just to be on the safe side, add $110 per month to your fees or to the premium, and that would be your overall cost. So I've met a lot of people my age, 56 years old, it's $600, $800, probably closer to $800 a month for an individual policy right now at 55 plus. So if I can get on one of the plans that's at $3,500 deductible HSA plan for $350 a month plus the $110 fee, $450, I'm saving quite a bit of money, and I'm also able to tax deduct it.
The life insurance is a locked-in rate, so it will never increase. The FUTA is only chargeable to the first 7,000 of taxable wages that you get ran through, so that will never go up. The state unemployment is based off of, depending on what state you're in, 13 to 14,000, so that won't increase more than 350. The only thing that's really going to fluctuate is your work comp, because your work comp is going to be a percentage of the gross wages that you decide to pay yourself. So this is really the only factor that would change. All these other ones would stay the same once you hit this 350. So if you're trying to crunch some numbers, that will help you.
But use 110.
Yeah. Well, yeah.
Because it will be, they would be withdrawn monthly. Your premiums, your paycheck, et cetera, is drawn out monthly, and your fees are drawn out monthly. So the hardest part I think people have with this is really, you're basically, like I said, you're joining a group, a company, an employer on a part-time basis to really get access to benefits, and you're sponsoring yourself in that. But you're using those dollars just as premium payments and deductions. But yes, there are a few fees to do it.
How would the work comp benefit, how would that be used, for instance?
Well, I'll let our work comp specialist answer that question.
So you would still be considered as an employee. So if you had an injury, then you would have the opportunity to file a claim that could be processed and treated if it was an on-the-job injury. So
So
if you fall downstairs in the house and break your leg, you may work with comp.
Technically, yes, because you are an employee. Once you file a claim, you have to do a first report of injury, and you have to get, if there's any other witnesses on there to get the statements, because we would file the claim. Now, if the claim was approved or not, that'd be something different, because if they did found out that you were at a pool party or something like that, and that's how you did it, then the claim would be denied. But you'd have the opportunity
Goes to your health insurance
to file a
plan.
claim.
Yeah.
Right.
Yeah, both of those will coordinate oftentimes. I see now lately a lot more letters going out to people that are insured asking, was this an accident? Was this a car accident? Did this happen at work? You know, they double check to make sure. So, you know, so if you break your leg, you're not working, it goes to your health insurance company. If you're working, contact them, put it on work comp. So, yes.
Yeah, I don't know much about this insurance stuff, but is this saying that I'm paying $13.20? So if I would break my leg, I'd get up to $10,000? Is that what that is? Or $10,000 for life insurance? Or what's the difference?
No, this is just strictly
Your wages.
Your wages. This is
How much I make? Or
this is how much you decide.
I'm deciding.
Yeah, how much you declare. And really, are you gonna cover yourself as a single person?
Yes.
Okay. Pick one of the plans. It's $400. Multiply that times 12, 4,800. That's all you're going to be putting in. Plus the 110 will come out of will be ACH'd by lever one as a fee. Okay. And then you'll get life insurance. You'll get work comp, and then they can get paid. So they'll continue to do it for us. It's a little different. I've had a lot of calls post meetings like this on, let's run it through again, or sometimes it's a spouse on the phone. I get a lot of calls from accountants too, just to help it through. So if you've got a good relationship with your accountant, have him or her call me, and I'd be more than happy to talk to them to explain what they're doing. Because each one of you might be set up differently.
Yeah.
Some of you might be an LLC, some of you might be an S Corp. I've talked to some accountants who theirs were C Corps. But any one of those, everyone I've talked to, they were all able to do this.
Okay.
And it really didn't interfere with what they were doing, because all they were doing was getting an additional W-2 that the accountant has to throw into the taxes at the end of the year. So, and since we're not giving you income, it's not really going to mess up what you're going to pay on your taxes. And anything, it's going to help you reduce your tax burden. It really should. And it gives you an opportunity to plan a little better. The very first meeting that I did here, we talked about, the gentleman said, can I do more than $25,000? Because he decided he wanted to use it as a tax planning purpose and put more into his federal and state so he can actually plan for the whole year instead of paying quarterly returns. Met with a guy at the office about 2 weeks ago, sat down with me, and he's in his first year and a half in the industry, and we were talking, I was asking him what he's setting aside and everything, and this helped him a lot. He actually went home, met with his accountant, and they actually came up with a different strategy on what he should be doing as far as his taxes are concerned, because it wasn't quite where he needed to be. So actually this helped him quite a bit.
You have the ability to change the amount of wages you want to pay yourself as well. So you can start off by just paying as much premium as you have. But if you speak with your accountant or your situation changes, then you can always change how much you're paying and running through the system as well.
Yeah, and if you want to contribute to the 401k, I've got, looking at a group right now that they do have kind of a pseudo group health plan, but the owner's like, I'm really limited on what I can do in my 401k, but through our program, it actually opens up to him quite a bit more. So he's looking at, he hasn't applied yet, but he's going to. So, and then we're going to introduce it to the other people in our office. So it opened up a pretty interesting opportunity for him. Just depends what you guys want to do. Everybody's going to be a little bit different, so that's why I'm willing to talk to you guys one-on-one, communicate via email, etc. So it fits. In my idea is the first step is always fill out the application, because that'll tell you because it's you're either accepted into the program or you're not, because primarily it's health insurance. Start there, then if the answer is yes, then let's really talk some more about how to arrange all that. Yes.
So how do they handle pre-existing conditions?
If you are accepted, pre-existing conditions are covered. You have to be but you have to be medically under it. Yeah, so it's like it is pre-Affordable Care Act time, when they used to have you fill out an application and they would come back to you and tell you they either accepted or rejected you. Yeah, same thing. Yeah, we wouldn't rate you up because we don't want to adjust the rates, but we will accept you.
That was my next question. Do they rate you up
No.
because you had a surgery in the last?
It's just going to be yes or no. And it varies. Everybody's a little bit different. Yeah, I've had some people apply that had surgery last year, but it was something that's completely done and over with, and they're fine. I got some people that potential have a pending surgery. That's not good. So it just depends upon your situation. Gentleman had a question.
Yeah, how difficult is it to go through the underwriting process?
Right now, honestly, we're probably accepting about half that apply, which, from my experience of being in the insurance industry for 28 years, is pretty normal when you're applying on an individual basis. So, and this program is brand new. We have to make it so that the plan has longevity and doesn't have big increases. Lifestyle as a company, their renewals run about 5% or less, so they're beating the industry averages. And we want to be able to do the same thing with them, because we want to continue to offer affordable health insurance to you guys. So we're going to have to, at the start of the program, we're going to be a little more conservative, I would suspect, from what I've seen so far from the underwriters.
This could be for the entire family, correct?
Could be for you and your dependents. Yep.
Do you guys have a minimum that you guys have to meet of our group to be able to?
No. I think I have some internal goals, but honestly, you guys, this association will probably not be the only association we offer to as well. So, which is good. You want it to be available to as many people as possible, because the bigger the pool of business, the more stable it is. So that's why, if you ever think of a large employer that has 50,000 employees, they are very stable. They're self-funded because they have such a large pool. Well, a small group of only 50, maybe 100, not quite as. One large claim can really wipe out all the premium. So the growth is important, absolutely. So, and it is one of my primary goals for the next several years, as a matter of fact. So Kip's going to help me out with that. So, great question. So that's insurance at its best.
So if you fill out an application, you get accepted, you don't want to start to January 1, do we have to go through another application closer to that period, since it's all
If you're thinking
2.5
January 1,
months?
I'd say fill out the application beginning in November.
December,
Yeah.
or November?
Yep, beginning of November. Yep. Because we can always get you enrolled early and get you set up and ready to go. Yeah, because think about it. If I'm the guy who runs the health insurance company, or the company, the employer, I get to say when you're allowed to come on. So, yeah. So anybody can be accepted and add on the first of any month. So you're coming on. So you're not restricted to January 1st or anything like that. Yep. So I've got some people starting November 1st. We've got several more coming on for December 1st. So they want to get a jump start on it because they're already paying their eyes too much, or their benefits aren't that great. Because they joined on Cigna in Missouri and they can't go to Kansas doctors. So
it's yearly when you start, not January.
What we'll end up doing is once we get everybody on board, our renewals will end up being January every year. Any other questions?
This may be a stupid question, but is there a way to do between this program and like our current Blue Cross, to do just the spouses on this program, and then
Are they self-employed?
my wife works for me.
Yeah, you could actually put her through this
And
if you
then
want to.
for 4 kids, that's issues. So
Okay. You could, yeah, you could break them. The only thing I advise is that by separating one person out, they have their own deductible, and then if you and the kids are covered under another plan, you guys have 2 deductibles, so now you have 3 for the whole family. But if this is reasonably priced enough that it's worth making that move, absolutely. So you can't do just kids, but you certainly could do just her if you wanted to.
So what, do you have a, what's the word? I'm assuming that this crosses state lines, so like if I'm in Texas and have an accident, I'm covered?
First Health is a national network, yes.
So that's out of network.
No, you still want to go to a First Health provider, and their First Health is coast to coast. Yeah, they're actually a network that's owned by Aetna. Used to be owned by Coventry. That's who started it.
That's who I was with, Coventry.
A lot of people with Coventry at one time, until they pulled out of the market on individual policies and got bought. No, that's a good question. Yeah, because again, you know, if
There were a
you
lot of policies where, when I was investigating last year, that if you weren't in the state, that you weren't covered.
right, is that Cigna?
No, it was, I don't remember.
Because I know on the Missouri side they sell a Cigna product that you
It was
cannot.
a Kansas.
You can't.
City.
Oh,
Kansas
okay.
City.
There's a Blue Cross of Kansas that you can't use Kansas City hospitals.
Medica.
What's that?
Medica.
Medica does that too? There you go. Yeah, they're very restricted.
What's
This
it
is
called?
not.
Medica.
Yeah, that's the one of the Better and Medica are the 2 that are available on the Kansas side. And then Kansas City, Blue Cross of Kansas for, yeah, a lot of restrictions.
Are you insured out of the country on trips?
Nobody really is insured out of the country, I'll be honest with you. So if you're going to do an out-of-country trip or a cruise or anything, get a travel accident policy, a travel health accident policy. Of course, I'll give us a plug. There's actually, go online and purchase one through our website at Heritage, what are we, heritagecompanies.com? HeritageKC.com. Thanks. I don't remember our website. And I do it myself. Any of the trips I've taken, any of the cruise I take, it's $50, $60 to buy a policy. Most of the time, they'll repatriate you, they'll fly you back, and there's a lot of different benefits that those will have that are more rounded for a trip than a health plan.
Or if you die.
Or if you die, they'll get your
bring
remains
stuff
back. They'll bring your remains and your stuff back.
Yeah.
That's really
I just
that's
signed
important.
up for one for Israel.
Yeah, there you
Yeah.
go. So that's smart.
Kind of a scary thing.
Yeah.
Are
And
you responsible for filing your own claims through the doctors, or they?
no, they'll do it for you. Yeah, and if you ask anybody what they take, you're going to be really using the First Health network, because that's who the doctors and hospitals will contract with. They'll go, well, who the heck is Lifestyles? But it's really going to be First Health that you're going to be telling them that you're going to be working with, because that's who they file the claims through, and then they process them, and Lifestyle Medova takes them.
And many doctors take them? I mean,
Oh, yeah, Lifestyles, yeah. Like I said, myfirsthealth.com, great place to go. You won't be disappointed. I haven't had anything missing yet. I'm talking about it. It's a big network. KU, St. Luke's, Shawnee Mission, yeah, all the big ones, Olathe, St. Joe. And you're not going to miss anything. Okay. Anything else I need to add? Memorize my website address.
We talked about joining. Technically, you're able to drop at any time too. You just stop paying yourself and not become an employee, or you don't pay yourself enough to cover the premium. So that would mean that you would then term your coverage at that point. The other thing I was going to say was about the ancillary benefits. So we talked a lot about the 401k, but the group term life is what you're paying for is the $10,000, but you have the additional opportunity to do voluntary life. There's a guaranteed issue of $150,000 for the employee, and then a guarantee issue of $50,000 for the spouse. And there's also short-term disability and long-term disability available. It's based off of the wages that you pay yourself, so just keep that in mind if you're interested in a disability policy. And accident and critical illness is also available to you. So those are kind of add-ons, but the health is the decision maker, and then once you come on board, you'll be able to elect a variety of other options for you.
Yeah, I've always recommended to my clients to make sure you have health insurance.
Yeah.
Life insurance is very, very important, and long-term disability. I know that's the 3 biggies in my opinion, because health gets you healthy, life if the first one fails. But what if you're stuck somewhere in between? You can't work. You're not making any sales. You're not making any income. Long-term disability can be a big deal. So That's always a consideration as well. But yeah, voluntary life, since it's a guarantee issue, and it's generally pretty inexpensive too, comparatively.
The disability is also a guaranteed issue if you get on board when you're first eligible. So I know that there's underwriting for the health, but if you are on board for the health, then on your first eligibility, so your first pay date, in my terminology, if you have disability at that point, then there's no underwriting for the disability. Yeah.
So one of my questions and concerns for the members is with the disability, usually like 66.5% of your salary. Well, where all of these folks are, for the most part, commission-based, how does the insurance company calculate what that 66% is? And could I have folks that are, if they're only based on what they're putting into the self-employment per year, does that leave them really short?
Yeah, it's going to be based on what they pick as their income.
Right.
Okay.
So, but if they're grossing up their income, doing a 401k through this and a lot of other benefits, and then choose to do the disability, obviously they get a much higher benefit.
Right.
But their cost of that is always based on what their benefit's going to be on top of it too. So it's good in one way, but they're not necessarily going to get, if they pick $10,000 and pick short or long-term disability, the payout on it's going to be relatively small.
Okay. And so is that going to be annualized, or is that? Since these are annual incomes, it would be based on how the So
calculation.
you have to have a year of income before you're down on disability?
Not necessarily. It should, but it'll be based on that income that they've chosen. They'll look at monthly, they've been paying X amount, so that equals a $10,000 annual income. Disability be paid out on that $10,000 income.
So it would be, you said it wouldn't gross out, so it would be all their insurance, everything that they've paid into the plan, on top of what they pay themselves back, is what the calculation for their income would be?
Should be under gross, period. Starting before anything's deducted.
Okay, great.
Yeah.
Good.
I don't want to sound stupid, I just want to ask, so what if your wages are $250,000 a year? What is your workman's comp rate?
Got a calculator?
Yeah, if you're in Kansas or Missouri, I think it's the same rate for Kansas or Missouri.
They are.
But I think it's
Should be, it's 0.3, it's your 0.39 or whatever.
0.39% of 250,000 is what your work comp would be.
What is it in 0.39%?
So 0.00.
Basically, 4%
Yeah.
of your wages would go to the workman's comp.
No, 0.39.
Yeah, it's
0.39%.
0.39%. So multiply times 0.0039.
So it's 0.0039.
Correct.
Is there a waiting
Well, they
period?
got 9750 at 25,000. So if your income's 10 times 25,000, that 9750 is going to be multiplied by 10.
Yeah.
Right. Yep. Remember, these are all annual too.
So if you later on decide to add dental vision, is there a waiting period for?
No, they're open. We'll do an open enrollment on those once we get the thing rolling, and there'll be no waiting period for it. I don't know if I'd run $250,000 through this though either.
No, I'm just asking, because I'm trying to understand what the wages are across the top there, how that correlates with your wages or your commissions as a realtor.
They don't. They're just examples to see what your fees would be for each one of the, if you pick one of those incomes. Majority are going to be here or under easily. That's because the premiums just aren't that expensive, and you may not buy you may not do the 401k, or you may not buy a bunch of the other benefits. You may just do medical dental or medical dental vision, and you're going to be under $500 a month for those.
That's why I was asking if this has anything to do with your actual income.
Not at all.
That was the question.
Yeah, it's what you pick to be in here. It's not anything to do with your overall what you claim on your taxes.
That's the only question.
Okay, got it.
But the reverse of that is you're only getting it paid out based on what you.
That is correct. You're
If
minimalizing
it's
it.
workman's comp benefit, or if it's a disability benefit, it's only going to be based on that.
Correct.
Amount you pay then.
Yep. And so far, nobody's really been interested in the disability because we're trying to minimize the incomes. But,
It's available.
But the health and dental and vision, definitely, most definitely. This is really the most expensive thing. It's where the health is where you're going to save all your money at.
Sounds like it.
Yeah, absolutely. It wouldn't surprise me if it's half of what you're paying now or even less. Trust me, I know.
Like, I'm pretty sure what I'm paying now, I don't have to meet it.
On your health plan?
Hmm, what's that?
There's always going to be some kind of, you could, I see, supposedly you could have a plan, there's simplicity plans from Humana that have no deductible, but they have hospital-based co-pays, and they have a large out-of-pocket. So you do have a max out-of-pocket at some point. So, take, if you want to do an HSA where you can write off some of those additional funds you've got going into your HSA account, $3,500, it's $3,500, 100%. I mean, you got a max out-of-pocket of $6,650, but
What I'm saying is that the savings plan that I already have, I don't have to meet, say, the $3,000 deductible before it kicks in. Because I know, like, I take my daughter to get her checkup every year and stuff like that, and they just cover it.
most health plans will cover your checkup, your child's, your wife's, all at a zero cost. So if you're not doing anything above that, then
Right.
yeah, you're not. You probably do have a deductible. You're just not. They're just not applying it to it because they cover those things for free.
Right.
Yep, and these would too. So yeah, there's some rare ones out there that have no deductible, but they do a lot of other co-pays. But most of your plans have some kind of deductible attributed to them. The nice thing is, from the Affordable Care Act, we have to accumulate everything you guys pay. In the old days, it would be you'd meet your deductible and you're out of pocket, but you'd still have co-pays for the rest of the year. It never stopped. But now, under the Affordable Care Act, they do require you to add all those things together into your max out of pocket, and then you're covered at 100% after that. So if you do have a bad year, I mean, you could be halfway through the year and not pay anything out of pocket. And that's why your HSA's account is very important. My cards are here. Call me, send me an email, whatever you want to do. I'll send you an application to complete. That'd be a great place to start. To me, the application's real easy, and I think it's worth taking the 10-15 minutes to complete it to see if you qualify. And like I said, if you go back to your office and talk about this, and you want me to come into your office and do a presentation, it'll be exactly the same as this.
What's your name again?
Scott Lepley. And I've been working with KCRAR for 16 years. So I've actually been their broker agent this whole time. They're very nice to me. So.
Okay.
Thank you.
Thank you, Scott.
Thank you very much.